Well, hello, and welcome to another episode of The Value of Everything. So this is a very quick thought experiment, sort of stroke news bulletin a little bit. So the Chinese market, last time I checked, has gone on another tumble. I think about in the margin of 8.6%, and that is rather scary, considering last week where I was mentioning about market forces and the battle between the government state and how the market tries to correctly value or find basically price discovery on the value of the assets, and to see if there has been a misallocation of capital. Now, as I predicted last week, I didn't think that China would be able to hold back the market force, and eventually it would begin to yield. Now, I didn't expect it was going to happen literally next week, but hey ho, these things sort of happen, and as it's kind of happening on a large time scale, and we're talking about a couple of trillion slinging around left, right and centre, there's a little bit more for the Chinese government state to deal with than what was normally the case when you would have a little bit of an expansion in a commodity market and say like copper, for example, and then the Chinese government said that they would reduce the interest rates and then the market would adjust accordingly. So it's not kind of like the way that things used to roll for China anymore, which puts us into a new position of market events, I would guess. Now, interesting dynamic I want to add to this is that we have the US. It's like Janet Yellen's the chairman of the Federal Reserve. It's her move next, and she has got herself into a little bit of a predicament. Firstly, the market, or the bond market, has pretty much priced it in that there's going to be no movement in the Federal Reserve interest rates for at least about 18 months. And you can tell that by seeing the future curves where the market is predicting how much the rates are going to be in certain future points. Now, so that's kind of interesting. And seeing that the market has priced the opposite of what Janet Yellen is saying that she's sort of going to be doing, like I'm going to give it a couple of quarter rate hikes, is kind of interesting. Now, so you got two moves and two position plays which are going to happen at this point. So either Janet Yellen says, "Oh well, we are not going to raise interest rates," which I would probably be more inclined for this move to happen. Then the US dollar will start to decline on that measure, because there would have been some certain view that the US dollar would have been a safe haven under the circumstance of what's happening in China and everything else. But there also will be this thought of, well, will they ever raise rates, and is America actually in trouble? Will they never be able to raise interest rates, and will I never be able to get value back in return for leaving my bonds in the US government's hands. So the market will get a tad bit spooked potentially by a no move or even a rate cut, which is, I think it's, we're pretty much in the territory where it pretty much can't get much lower now. And so we'd have a very this market's not going too many places, and the US dollar, from being this gigantic safe haven, is going to be like, oh well, this is a pretty bad prospect. But maybe people were going to say, well, this is still the best of the bad bunch. Or Janet Yellen will go to the market and say, well, I'm not a liar. I'm going to raise the rates because all of the stock market analysis which is coming through is showing that all our stock market is going up in value, even though it's by the means of getting free access to all this credit that they're supplying and repurchasing back on their own stock price, rather than actually retooling and making more efficiencies, cost saving, and producing better and newer products. They are repurchasing the value of the stock. So that analysis coming through, and Janet Yellen says, okay, well, we're going to raise rates now because it seems like a recovery is on its way. Now, I don't see that happening because, again, she's going to say, well, there's problems in China, there's problems around the world, the commodity prices are crashing. So that signal where you see commodity prices crashing is telling you that there is a deflationary cycle happening, and that means that there is a deficiency in liquidity, so that people do not want to purchase any of these goods anymore. So the customer demand has gone down, and therefore people just, the supply and demand has been taken away. Well, the demand has been taken away. The supply will be in excess. So you're seeing signals that there's a deflationary thing happening now. Which is basically what should have been happening from the onset, where at the point when we did have the market crashes, rather than supplying the market with tons of liquidity and basically propping up banking sectors and other sectors which lent out too much money, and in a proper free market system should have failed, so that you would have had a restart of the financial market system and things like that. Because if you do too much risky lending, then basically there is failure, and if you're very shrewd with your lending, then you are more supported, and then the market provides you with more capital, and then you are the chosen bank of the future. There has been plenty of failures in the past, but now that the government steps in, puts rules and regulations, guarantees loans for deposit savers up to certain limits, that sort of system doesn't kick in any further. But when we have a true free market financial sector, you shouldn't really be seeing that sort of thing happening, and you will have banking risk and failure occurring. So you choose, if you do not want to have too much risk, you choose to go to the bank which is the safest and has the lowest terms of interest. And if you choose to deposit your money into a bank which does slightly more riskier loans, then they will obviously be paying you with a higher interest rate. So that's just a general pointer on the market and what would have occurred beforehand. Now, if all of those banks would have failed, you would have again still had a total lack of liquidity that you would have had, where all this excessive credit would have was continually expanding, and there would have been more margin on margin lending, particularly which was being focused on the housing market. That would have totally gone into a depression mode, and there would have been a total lockdown of credit expansion, and the prices of all commodity goods would have shot down to represent that at the same time as the economy would have shot down at the same time. Now, we're in this weird scenario where certain alarm bells kick off at certain points in time. You see that whilst we have a very good stock market, commodity prices are crashing, which does seem like, what the hell is going on? And there's another little interesting element as well in terms of we're seeing obviously your oils, metals, all going downwards. But what maybe you might see in an economic situation which is getting quite desperate is people choosing to stick with precious metals, because that can be the government's way of getting themselves out of trouble and getting people getting out of trouble. So once the major indicator is that if the government chooses to inflate their currency out of control, so it gets into a hyperinflationary state, then the most important things of value that you would hold at that point is the assets that do not which are least affected by hyperinflation. Now, usually the safer investments are things like gold. Just a little note before I mention any of this. I do not have any sort of support or backing by any gold companies or anything like that, and I do not take whatever I say as gospel. Do your own research and don't ever make investment decisions based upon some man telling you a little podcast about something. Do your own research and make your own decisions. But back on to this, the other point. So gold comes in very handy, especially for people, because people can still maintain the value of the gold bars during the Weimar Republic. That's like the early Germany before the during the Great Depression. The people that had the silvers and the golds seemed to be all right in comparison to the ones that had all the notes, which ended up turning their notes into just like paper to set on fire to keep warm. Don't know why that was so hard to get out. So it's very handy, and especially when a government is having difficulties with its own currency, if it's more backed by the value of gold, it's got an ability to manage the currency. If it gets into a hyperinflation spiral, it can start using that currency to purchase it back and stabilize it if the market so chooses to fight against it. So you do have this mechanism of fighting against the market force, and that's why governments love to have would prefer to have a nice hefty chunk of gold to stabilize their currency if it was under attack under a hyperinflationary state. Because if it gets too far into a hyperinflation, then the government sort of loses a lot of control. However, I think we've got a little situation here with China. Now, this is my very not very well-founded knowledge here, but I think we may have a situation here where China is trying to keep up a market. It wants to have that impeccable economic data coming out mentioning that we have 10% increase in our economy every year, and everything is going really cushiony. And now it's been blocking off people from doing short selling. It's been doing loads of sort of manipulations by having its own state-run company trying to repurchase off dying stock prices. And it was trying to manage that last week, and it seemed to have worked, but the market is fighting against the state once again. And now I mentioned this last week that there was a flash crash in gold, and the commodity prices in general were going down. The gold flash crash and the general decline in gold could be a circumstance where China may be quite in excess of gold in the first place, but just out of choice, considering that they're still an import economy. Sorry, an export economy. They don't mind to have a currency that's pretty weak anyway. And having gold available to them in excess, they're using that potentially to keep the Shanghai Deposit Index afloat. So in the meantime, they're supplying the market with extra surplus of gold. This is a massive conjecture on my part here. So just take everything that I say with a pinch of salt, do a little bit of research. I could be talking right out of my ass. Next up would be... why do I see people just talking to people on the street and it's a main road intersection? I've got no idea what that was all about. Anyway, that's my little idea of what potentially might be happening, and that's why you're seeing a major decline in gold when you would presume when people fly to safety, you would jump onto gold like some kind of hillbilly in the Midwest during the gold rush. Anyway, so there is the one flight to safety, which everyone seems to like, and this is something that is always kind of funny, but the flight to safety is US bonds. Everyone predicts that one of the nicest, safest havens to be in is the US bond market, because people predict that the Americans have got the best ability to tax their people in the future. That's how you perceive a bond market, and that is the world's safest bet. It's interesting as well now seeing that China has got a fairly large problem on its hands. Particularly, it's probably maybe since 2007 as well. That seeing that it's trying to keep down the amount of US bonds in its supply anyway, because maybe it doesn't think that it's really the US dollar is going to be that good in the future anyway, and it may get itself into a bit of a inflationary cycle where it has to print more money and basically sell bonds and buy back its own bonds for that purpose, which has been doing by the methods of quantitative easing. Maybe China, with its surplus, well, plenty of surpluses, but especially in US bonds, may decide to sell that back onto the market. That would be quite disastrous for the bond holders in that respect, and that again would require a humongous reaction from the US government to again do a massive quantitative easing cycle, which would shoot down the US dollar quite rapidly at that point. And that would spook the market quite rapidly, but keeps the supply of liquidity running, depending on how large the quantitative easing cycle is. But that's like the next act. I don't know how they would be able to I'm very interested to see how the next quantitative easing cycle is sort of announced. Would it be just one of those casuals? Another quantitative easing cycle. You know, just doing what is normal. Nothing to see here. Or will we have a situation where we get sorry, I just got people driving all over the place today. Or we have another situation where they have to say, look, American people, we are going to have to do, like, we're going to have to pull out the big words now. Rather than trillion, we're going to say quadrillion now. So now we're going to move to the next level. Is it going to be one of those kind of sort of events? So yeah, that's all to play out for them, meaning of time. And if that sort of happens, then the US dollar starts to crash against all of its counterparts at that point. But it's a funny cycle because everyone's in the same boat and everyone's racing to the bottom at this point, and there doesn't seem to be any end in sight. Now, seeing that, so let's just recap on a few other of these items. So if US dollar is going to go, so the bonds are doing well, the market's trying to fly to safety, and people are saying, okay, well, the stock market's doing okay, even though they're doing stock buybacks, is looking all right. So people were going and investing into the US dollar. US dollar, if there is a another cycle, people were selling back and getting rid of US bonds. Say like we're doing a big component from China, and there's large large market turmoil, then the US dollar or the US government may, or the Federal Reserve, will do another round of quantitative easing. That will shoot down US dollar price, the US dollar, and potentially commodities may go up. But the overhanging issue that we have here is that this extra liquidity measure that we keep on floating back into the cycle doesn't necessarily kickstart the economy, and we have this continuous vicious cycle which occurs time and time again. And the problem is, even though the larger numbers that are being used doesn't necessarily affect what is happening in the market. And we just have a cycle where the economy is not necessarily doing any better, and we're just using that excess of liquidity just to buy back stocks and not produce anything of any great need. It just runs about in that continuous state until we have to get a bond market run. So I would expect the bond market just to completely just close up, and then the markets to having to say that we need a much higher yield to hold these bonds. I can't think of like any other sort of next biting point, but the bond market would potentially have to be quite spooked, and then they would say, okay, now seeing that you're trashing your US dollar, and I think you're going to do this perpetually forevermore, I want a higher premium for you to do this. And if the US dollar is not getting this, so essentially they're using their own money to purchase their own bonds, but from a certain standpoint, they are getting a little bit of investors and market people and institutional investors putting money supply into the US government. If for whatever reason their debt appetite starts to get really entrenched and they start to declare that the dollar bonds are not the way to go, then we do see the hiking of interest rates on a very large scale. That creates an even more vicious scale with the terms that basically US dollars debt is going to be in, all like the deficit spending is in interest rates, and if the market interest rate is shooting up, then they have to pay more to maintain the deficit. That in turn hurts them even further, and then that requires them to go further in pushing the quantitative easing. Now, I don't know at this point, I don't know how far they can start trashing their US dollar, and maybe you would start to get these massive anomalies. Maybe you might have commodities shooting back up at some point where it's just it's crashing down so hard. And even though, again, on a normal level, and basically because you're not improving anything on a production level, that's getting smashed as well. Yeah, it's all like a very nasty, vicious circle. China sort of interacts in it by having still, even though they seem to be looking like having all the bad news and they've got the black swans which are setting off, it doesn't necessarily seem quite so bad for them. I guess there's a lot more people in poverty. They've got less resources and things like that, and they've got a lot of margin lending and all of that. A lot of the excesses has been created by the margin lending, and they've got the shadow banking system and the property bubble, and the oversupply in infrastructure expansion as well. But China's at least got a surplus. They've got supplies. They've got gold. So they're a bit more equipped and a bit more tooled up for this kind of situation. I know obviously they've got a lot more mouths to feed rather than what America has. But it is a rather dire situation, whatever sort of economy that you're looking at the moment. For the meantime, in terms of where things can go next, it's very interesting. China will still need in the long run to stop being a net exporter and start to kick in at some point their internal market and start to be sort of like a new age America at some point. But I don't think they can necessarily do it. They're trying to bring in all the peasant people into the cities and creating this new service industry and maybe some high-tech industry. But they are centrally planning it, which is creating a lot of malinvestment and the destruction of price discovery. So yeah, interesting terms of events. Not sure what's going to happen quite yet. If I was going to predict anything right now, it's going to be a lot more kicking cans down the road and a little bit more despair. Watch out for Bitcoin. Bitcoin is, if you go to just Google search Bitcoin blockchain space US dollar, you'll see the curve coming back upwards again. It's been down in this major trough for quite some time, and now it's lipping up quite nicely. So keep an eye on that, because that's potentially, if all turns to shit, you can be in a monetary system which is not centrally, which has no central power, and is secured by the power of cryptography, which is basically the power of number combination cracking. So it's secured in numbers itself, which is far better than having a politician in control of your money. So that's always a little interesting reserve point. You may have if the market's starting to signal that Bitcoins are quite kind of interesting, that could see a lot of I think what you would have, maybe the general people would be looking to jump into that as a measure of security. I think you always think that the Greece were going to just jump into it and maybe convert it as a currency, but you got to look at America. America are far more technology savvy. They have the ability and the power to actually convert over to that kind of system a lot quicker than what could like a nation like Greece could. Particularly if you like consider country, like the state of California, which obviously is probably the pioneers of all technology. The conversion over to a Bitcoin currency could be immense. And if this, the major thing is that if you've got a hyperinflationary situation where your dollar's getting trashed, then yeah, Bitcoin starts to look increasingly attractive. But when you've got the power of the state and the guns and the regulations, you may have, like there has been in the past, bans on storing gold and storing precious metals. You may have a ban on storing bitcoins. However, the problem with storing bitcoins is that you just need to remember a number, and once you remember that number, then there's no real way of them getting that from you. It's not a physical item, it is a virtual item. So interesting state of play, how technology will combat against the state. And even though it's a good cryptography has been a great method for secret agencies, it's the secrecy starts to fight back, and the cryptography and this military level cryptography is actually the thing that sort of overthrows the system in itself. It's a very interesting sort of state of play in that point. Yeah, so keep your eyes on Bitcoin. Bitcoin's an interesting move. You may still have this kick down of the precious metals, while governments may need to use it and oversupply the market with it, because that is the real use. Well, that is the real money. That's where you would have gold coins being gold and silver coins being silver. That was real money, and that was legal tender with the king and queen's head on it. But that had changed over time. Yeah, so there's my thoughts to ponder over. If you've got anything else to add to that, I'll welcome any suggestions. Is there any little other pointers I would like to add to the economic situation? Yeah, so I think things are just going to still play out fairly slowly until there will be some kind of big market shocks that start to hit on a global level around the world. I think even seeing like an 8% and a 10% here and there on the Shanghai Composite Index, it's not necessarily the end of the world, and it's not really like it's a tragedy. Obviously the financial markets are very highly focused on it, but it's potentially not front page everywhere just yet. So you never know what the capability of the Chinese government is. I've mentioned this many times before. They do have what's predicted. I mean, I think America's with Fort Knox is meant to have the largest gold reserves, but there's a lot of theories as that gold has been lent out and lent out further and lent out further. That there ain't really what was meant to be there in the first place, where they were an incredible free market economy. China are a net importer, and they are the largest producers of gold in the world. So you've got to put that in that context. And some people believe that China will have or has got the largest gold reserves in that respect. And if they've got the largest supply and they are panicked and spooked by the market and they want to put away the pain for the meantime, they could be using their gold resources, which doesn't really help them out in the future, but that's usually what the people usually like to do for instant gratification. So that's probably more an opted choice. Or they could start selling the US bonds in a massive way, but that starts creating political tension, and that's not really going to be that great, because at the end of the day, even though they do provide the debt for them to purchase all of the Chinese goods, they are then America is China's still #1 customer, so you're going to still lend money to this poor person to purchase more goods into your store. But it's a point of when you know that that poor person isn't going to be able to afford it any further. So what would the financial markets do at that point? So as I mentioned, if you've got a bond market that's just going into chaos, your interest rates, people are going to say, right, we need to start pricing risk correctly. Now, the government is obviously, especially the US government, is quantitative easing, so they are purchasing down they're buying back the bonds, so they're creating demand in their own debt, and they're driving down the price of these bonds and thus lowering the price of their dollar. But I mentioned as before, there is an element of the market which is investing into US bonds as well. But when people say, I don't want any risk anymore, I don't even like to put my money into US bonds, this seems like we're going into a very strange place right now, and I would like to just take all my money off the gambling table right now, even though I might be on the safest bet. And that, again, drives the market to say, okay, well, now that there's people been pulling out of your bonds and people are selling your bonds, you've got a couple of choices. You could either, the US Federal Reserve starts to buy more of its bonds, which again, I don't know, like, can you just keep on buying your own bonds indefinitely so that you pay your own debts, and that way I can't see that happening. You're just basically creating further and further more debt and just reducing your currency value. You're turning your government into shit, and it's just getting weaker and weaker and weaker. So you're destroying the power of the state, and that's interesting, but it's also dangerous as well, because once you disrupt the power of the state and you've got a lot of debt and a lot of military and a lot of guns and not much money to pay anybody off, then you've got kind of an issue in terms of what the government can do. Now, it can start to choose to enforce very draconian rules, and can start to oppress people and start to apply the Patriot Acts and other acts which it used originally for acts of terrorism onto its normal white Caucasian males. It can start to apply it to them, and to save its arse, it can start to say, okay, well, your assets in your bank account is ours now. Your pension fund, which was once yours, we're going to just reserve that as ours. There's not much we can do about it, because the government's going to die if we don't have any other choice. And as we've got all the guns, there's no other choice in that matter anyway. Or that, yeah, they can reclaim assets from you. So there's all these little areas which could happen. Now, I'm not suggesting that this is going to happen straight away overnight or anything like that, but yeah, if you saw what happened with Cyprus, where they froze out the accounts and stole your money, so you got your money and your deposit sitting there, and then all of a sudden, bing, we've just shaved off 20%, 50%, whatever's required. Then you got to sort of concern yourself in that respect. So yeah, what can you do? The best asset that you can ever own or possess is the most precious material that has ever existed is not what's in the ground, not what's produced in a factory, it's what's that little fatty tissue inside your skull. So never forget that. That is the thing that is going to save you, and that is the thing that is going to make you prosper in all of these situations. So never forget that. I hate going over the rivers and the roads. Yeah, so you always tool your mind, always try and learn further information. Do not always just listen to what I say as gospel, and just be wary of the market. I would recommend doing more research. Look at Argentina, what they did. I think the information from Argentina is quite limited. It's not very useful, but that's a good model of how governments start to work in a scenario of what's a state of depression, but the problem is that we are now in a state of potential global depression. So it's a whole little can of worms here. You got to look at what's happened in the past. There has been global depression, especially the 1930s. See what happens there. One thing that we have to do to keep our minds together is to not fall into the trap of pointing the finger of blame, particularly when the government points the finger of blame at certain segments of society and then tries to enforce violence against them. There will be certain scapegoats being made out. It's really hard to tell. I guess if you get a situation where literally the whole government system runs out of money, there's going to be a lot of people pointing a lot of fingers around, and they're going to say, where has this money gone? Especially from a US perspective, they're going to be saying, where has all this money gone? Why are we in this mess? We who were once the military power of the world, we were basically the only empire which was running. Everyone wanted to supply goods to this country. This country was amazing. This country had everything going for it. It had the greatest minds being supplied to it. It had the free market. What has gone wrong here? Now, if people start to point the finger of blame at immigration, if they point the finger of blame at the welfare class, you name it. You could have any kind of number of those things. The foreigners is an easy target. However, as America is a little bit more, how the globe is a little bit more mixed in general, it's hard to get that sort of blame of foreigners. But you do sort of see that with Donald Trump blaming the Mexicans for bringing over crime and drugs and violence. So just watch out for the blame game. That's our danger points, and watch out at how quickly governments can use things that they pass as regulations quite nicely and quite silently without you ever knowing, and then all of a sudden, boom, they're invoking it on you straight away. It's a tricky situation to be in, but remember, it's also the most interesting time ever to be alive. Scenarios like this happen, and this is where great people are created. So welcome to the most eventful time in your life. You might not be prepared for it, but it's going to be interesting anyway. What else can I say? Yeah, make good friends. You're going to find out who your good friends are around these times. And you're going to find out the ones which do runners on you when times get a bit hard. So, yeah, be very wary of that. As I say, learn your skills, learn as much as you can, foresee the future as much as you possibly can see, and also remember, like, there's also great opportunities that can arise as soon as we find ourselves in a situation where everything resets itself. Now that you thought you could never buy yourself a house, you can potentially buy yourself a house very easily. So if you kept yourself away from the debt credit expansion, which would have been quite recommended, now you are in a scenario where you can reap the rewards as long as you've got a little bit of capital, and maybe you haven't got fiat currency, but maybe gold, maybe bitcoins, who knows. I don't know what will be the resource of the future, but maybe still the most important resource is what's in our minds and how we adopt things and how we improve things for the future. Remember as well, I think I've mentioned this one as well in the a few of my Greek podcasts, that if a government starts to cut down and start to retract and start to provide less services for the public as in general, free market has to kick in at some point. So you're going to see a shitload of opportunities arise in the marketplace where it was jobs for the boys, and you'd have had loads of manipulations and monopolies and people and a very uncompetitive market being provided for. Now, all of a sudden, you're going to see that roads aren't going to be built. Roads are not even owned by anybody. And you can come along and start buying these roads and repairing them and charging people to drive across them if they have a little GPS gizmo on them. Who knows? You could see that the government nobody's picking up the garbage anymore, so you might start to call around saying, hey, I can pick up your garbage for this, that and the other, and I'll be able to dispose it for you, seeing that all the unions are on strike. Opportunities arise out of very strange circumstances. So being prepared, having a little bit of knowledge of services that are provided and how you can extract, or not extract, but create wealth and value for other people is a great opportunity to be in, and a great poise to be in as well. So remember that opportunity, remember to keep out of debt, remember to keep the mind focused and tooled up on opportunities in the future and how you can create value for everybody else, and you may have a very blissful future. Keep good friends as well. And on that note, thank you very much for your time, and let me know if you liked or disliked the podcast, and give me any comments, and really start looking at your finances and try and get rid of those debts. Anyway, thank you very much for your time, and I'll speak to you soon.